All right, guys, I'm so sorry. I hit stop recording instead of pause. I had to pause my recording. I do not want to go and re-record the whole thing. So again, this is Futures Brizio. I'm going to post, this is part two of a video I started a little while ago. So in the title of the video, I'll put part one and part two on using Heiken Ashi Smooth and just looking at these markets, okay? So if you're watching part two right now, watch part one first so you know where I've been talking about. But I'm just going to pick right back up where I was. And again, I'm just talking about using the Heiken Ashi Smooth in different markets. I was talking about this being a very choppy area, and this is where any indicator oscillator will fail in sideways market conditions. Of course, you could scalp this on short time frames, but this sideways, you can see all the color changes. You can see the indicator up and down. This becomes difficult. So obviously, in hindsight, smooth trending markets tend to be the best. All right. So let's just finish looking at Nasdaq, and then we'll probably wrap up. Maybe I'll take a quick look at corn and soybeans. We already looked at natural gas and 10-year yields in the last one. So now you can see we've been trending up. Now we have this. We have red Heiken Ashi candles, and we have price below the Heiken Ashi trending down. So where is the market structure? Well, the overall market structure, I think for me, is like right here. Okay, so this is, whoops. Again, guys, I hate these. I'm just going to drop a line on here. So this is the overall structure area right here. Okay. And then, we have kind of a minor level sitting right here. Okay. Now you can see we've got the oscillator. We've got the oscillator moving down. CCI is moving down right here. Okay. And so ultimately what I'd like to see is get this oscillator down into the oversold area down in here and then have it turn higher. Now, whether price breaches this area or whether we come down deeper back towards this area, I don't know. For all you kind of fair value gap people, I mean, there is a little fair value gap on this candle, and then there's one right here. This one right here would actually make more sense to have price come down and potentially take out this somewhere into this area would be a good place to potentially look. So assuming this uptrend continues, you can use the smooth Heiken Ashi candles as a guide. Either when you get a green one, which that signal might be a little late, a green one showing that the uptrend's continuing, or some kind of turn back up after going into oversold on the CCI, for instance. And then, couple that with some kind of bullish price action like an engulfing candle back to the upside. Okay. But this becomes, assuming this uptrend holds, anytime now you have these red Heiken Ashi Smooth candles, the deeper this goes, as long as it holds the overall structure, the deeper this goes, the better risk to reward and lower risk trade you could be looking at here, because you're allowing price to go really deep and then you get back in at a much better price and just ride the next wave up instead of just getting in too soon. Especially if you got red Heiken Ashi candles, there's no reason to go back into this trade right now. I mean, the Heiken Ashi candles are usually very slow, so the fact that these are still red just tells you the market probably has a little bit more downside to go. Now, we came here, we had these red, and then the first green Heiken Ashi candle was right here. We actually did have a pull out of the oversold zone right in here, and then the next candle, we got that green one. So instead of getting in here, you would have gotten in right here. It's a little bit late. I mean, you missed these two initial ones, but it's an extra confirmation, whether you got in here or here, that this is probably going to go higher. And of course it did. So yes, obviously, ideally, if you'd gotten in here, it was the best entry. But even if you got in here, this still ended up being a good trade. We had this little pullback. The candle stayed green, so you wouldn't have exited here anyways. And, they stayed green and it rallied. And so you would have made from, here to here. Obviously, again, this is the most ideal. But again, this is the issue with Heiken Ashi Smooth is they are going to be a little bit delayed. And again, you can change the setting from 10 to something shorter, you probably will get a green one sooner, but you're going to make the rest of your chart noisy because then you're going to have other areas, where it turns red and, maybe you don't want to see that. So for instance, so let's just do that again. Let's change this to 5. I'm just going to cut that in half. And, you can see we get a false entry right here. The indicator actually turned green, but if you went in long right here, you were in way too soon. Price went down and made a new low, and you would have been in pretty significant drawdown. Now, eventually it did come back up, but the difference between getting in here, and remember we had a green candle right here, it's not that much different. So if you just waited, you would have gotten about the same entry and not gone into any drawdown. So that's what I'm saying, changing the indicator settings, you just have to be careful with that because that's not always going to help you. So that's going to sometimes lead to a lot more false signals about entry. So anyway, so that's that for Nasdaq. Just looking at that, I just want to look at something that's traded a little more heavy. We already looked at natural gas, and just quickly looking at soybean. Clearly, we're in an uptrend here. Okay, again, we were going down. We had all this red, and we had this pullback. Price turns, the indicator turns red again here. We did have a CCI crossover right here. We had a false CCI crossover here. Now, again, this is where the indicator might help you. We had a CCI crossover out of overbought down right here, but the indicator was still green. So hopefully this would have filtered and you would have not gone short right here because the price kept going up, and this turned out to be accurate. Then finally we get the crossover here, and then we get a red Heiken Ashi candle right here. So this is definitely a late entry, but it still would have been a profitable trade if you had taken it down to here. Now we've had a reversal, certainly because we took out this structure area. This becomes our structure. We see we blasted right through that. Okay, we blasted right through it. And, so now I'd like to see, again, some red candles, have the indicator pull down, into oversold, and then wait for some kind of bullish price action back up. After all this big run up, I certainly don't want to just jump in here near the top. I want to see a better pullback. So some red Heiken Ashi candles, a deeper pullback. Okay, we do have a fair value gap right here on this breakout candle. This is actually a really good area for price to come back to, to retest this previous resistance now as support. There's also an imbalance here to see price come down, see some red candles. Price comes somewhere inside the range of this candle, like this. By then, this indicator would be driven down, and then look for an entry that way. All right. And then lastly, on corn, it's very much like soybean, almost identical situation. We broke out right here above this market structure area. And again, I'd like to see some sort of red pullback, red candles forming on the Heiken Ashi indicator. Okay, and then to see some red candle oscillator to go down into oversold and then turn back up. We do have imbalance. We do have several imbalances here, but I like the one around the breakout area. So which is right here. Here's the breakout candle. So, pull back down towards this yellow line. Even if it went a little bit deeper, it would be okay, but I'd prefer to see it stay above this level, no lower than this level, just because this was our previous structure area. Usually that will hold. So, some kind of pullback down towards here, again, imbalance candle here, and then have it, shoot and go back up. In the meantime, the oscillator could pull down, and then, you can see that cross back above the oversold line, right there. And, that's a potential re-entry point. Okay. But I do, obviously corn looks bullish like soybeans. Natural gas continues to look bearish. I'm not sure if this is a really good place to think about entry now because it's already moving down. I'd like to see a pullback. And then again on these 10-year yields, again, more bullish, waiting for a pullback, hopefully. And Nasdaq, still bullish for now. We are potentially in a pullback phase right now. So that's one maybe to watch a little more closely. All right, guys, so I'm going to leave it there. Again, this is part 2. Sorry, I stopped my video instead of pausing it, and I didn't want to start all over again. So again, if you're just watching this one, there is a part 1 where I, talked about this indicator a little bit at the beginning. So feel free to watch that too. All right, guys, as always, make sure you smash that like button, subscribe to the channel. Questions or comments, leave them down below. Again, this is TradingView. This is a free indicator. So just another way you can help visualize price action. Again, market structure is still king. Levels are still king. These are just visual tools to help you maybe time entries and exits and into the market, and hopefully give you some extra confirmation before you hit buy or sell. All right. All right, guys, take care. Have a good rest of your weekend, and we'll be back this week with some more discussion. All right. Talk to you soon.